Hello everyone, how is it going? Today we are going to be talking about GameStop. Yep, that's right, we're talking about GameStop, everyone. So buckle up because we are going to be selling vol on GameStop. Yeah, I was talking to Jordan about it this morning. It looks like a pretty good idea. The further dated vols are just unbelievably expensive, and we are going to be talking about that as well as a couple more earnings events today. Y'all thought that earnings season was done. We still got a few more. We got Alta today. We got Docu. We got Stne. Got a lot of stuff to talk about today. So just a quick reminder for anybody who's new to the stream. My name is Sean Ryan. I am one of the co-founders of Predicting Alpha. And we run this morning stream every day, Monday to Friday at 10:30 a.m. Eastern Standard with the goal of giving you a quantitative insight into the market. Right? Most people are stuck staring at the charts, trying to figure out what the next play is going to be. But I hope to expose you to a couple different ideas that are out there for ways that you can actually find really good trading opportunities, right? Underpriced assets, inefficiencies, overpriced assets. These things do exist, and they are out there for us as self-directed traders to find. We just need to change the lens that we're looking at this game through slightly, and that's what I really hope to give you through this morning live stream. So just give me 1 second here to clean up my desktop. I want to pop out the little chat box here so I can see what all of you are saying. Joey, Eric, what's going on, guys? Tim, what's up? Hope you guys are doing well. Okay. Let's see. We got Thinkorswim all locked and loaded. Perfect. All right. So GME. Shall we start with that? What do you guys think? Yeah, let's start with GameStop. So, as we know, GameStop is back on a tear. Danny, what's up, man? GameStop's on a tear, guys. Right, it's back all the way up here. Right, we look at the 1 month, boop, all the way back up. And when most people are trading these GameStop options, what they're looking at is these near dated options. They're trading the monthly or the weekly. But, something we haven't really chatted about, I think I mentioned it maybe briefly on last night's live, is what about the further dated options? What's going on with them? Right? What are we seeing with these 1 year expiry, 2 year expiry type options? Yeah, we're talking about GameStop today, Micah. And what you find is they're actually implying an insane level of volatility. Remember, as we go further out in time, we should see the implied vol levels come down most of the time, right? And but in GameStop, it's extremely inflated. Okay, we can see here, further dated vols trading between somewhere of 225 and 168, right? Somewhere in that range. And what we're going to actually be looking at, it's trading at 190 vols for the Jan 2022s. And for a couple of reasons, I think that this is way too expensive. Michael, that's so funny, man. So, what can we do here? Well, first of all, we have to formulate what we think is going to happen to GME, right? So, I think it's very likely that, maybe not today or tomorrow, but eventually GME goes back down, right? The stock comes down, and when that happens, we will also see the volatility get crushed. Vols will drop, stock will drop is sort of what I'm thinking will happen. Maybe not today, maybe not tomorrow, but inevitably in the future. So we can structure out a trade that makes a ton of money if that were to happen. Okay? And here's what I was looking at doing. All right, so let's come over to GME. And we are going to go to the Jan 2022 expiry. And we are going to trade this here, the 310 straddle. Take a look at this. The $310 straddle is currently going for $361. So let's take a look. Get rid of some of these extra positions we got lurking at the bottom of the page here. Ronnie Q, what's going on, man? Hey, Ronnie, make sure to book a one-on-one for next week. I got some cool ideas I want to run by you. we're going to be releasing a new version of the terminal soon. It's going to have a few features that I think you'll really like. And I just wanted to go over them with you. So now the thing to note is putting on this trade is capital intensive. All right, if you're trading a $5,000 account, pay attention because it's kind of cool, but this ain't for you. This ain't gonna happen, right? You're gonna need at least you gotta be able to put up like 50K on this thing. It's your margin's gonna, if you have a 30K account, it's gonna take up your whole account. But look at this, right? We have a little bit of negative delta as we go into it, right? And in the long run, we have break evens at like 670 and 0, right? Even if this thing goes to 0, we're still making $5,000 per position, right? And given what we think is going to happen, right? It's highly unlikely that we'll see it push above this mark. But also, we need to be cautious here because we're not necessarily trying to hold this thing for a year. Right, that'd be a unfortunate use of capital. I wouldn't really want to do that. So what I'm really looking for is I'm looking for that level of volatility to change, right? Let's think about what this position's really sensitive to, right? Take a look at this bottom price slice, right? Our real sensitivity here is to Vega, right? Vega is our major sensitivity. So what are the vols trading at here right now? 197, 190 averaged out. So what do we think could happen here? Maybe let's come into the terminal. Right, these further dated vols maybe come down by 70, 80 points. Right? Let's have a look here. And if that happens, we're gonna make a ton of money. Right? And this is really what we're hoping to happen, right? When we're trading these longer dated options, right? It's one of the characteristics about the option chain. We're not too concerned with the direction. What we're really concerned with is the market's future forecast of what's going to happen, right? The stock could move 10% today. It's not really a huge deal, right? Like, let's go back. Let's see what happens, right? Let's reset this. And let's see what happens if the stock were to move, up 10%. Right? Check this out. So watch where this yellow line moves to. Change that to a 10. Right? If the stock were to jump up 10%, we'd be down $1,000. That's not a huge deal. Right? Stock, comes down 10%, we would be up $1,000. It's not a huge deal. Where we make that big return is if we see that volatility come down by somewhere between, 50 and 100 points, right? Let's say 70 points here. That's where we start making some serious coin. And just given where the volatility is at right now, I think that it's likely to happen. If it squeezes to 1,000, we would definitely be losing a ton of money, right? Because if it squeezed to 1,000, the volatility would go up, and it would definitely be a really, really bad situation if it squeezed to 1,000. But I have good reason to believe it's very unlikely that this thing squeezes to 1,000. The reason being is, let's come over here. Check this out. GME stock. Okay. When it's $264 per share, it has a market cap of about 20 billion. So, think about this. What's easier to pump? A penny stock or Apple? Obviously the penny stock. It's a lot smaller of a company. You don't need as much money to push it. So at $264, GME is a $18 billion company. But at $1,000, it's now an $80 billion company. Pushing an $80 billion company is very different than pushing a $18 billion company. You would need a lot more volume coming in on the back end here to continue to push it to that high. And I'm not sure where that's going to come from. I feel like anyone who's willing to diamond hands this is already diamond handsing it, right? Anyone who's hodling is already hodling. We gotta, where's this unbelievably, where's this next level of volume going to come from? And I understand the whole thing about people covering their shorts and all that. and that it's not over, but I don't think the volume's there to push this thing to $1,000, right? And could this go to 400? Sure, but that's why you want to be in a spot where you're not going to get liquidated if you take this. But it's definitely looking very, very expensive, right? The whole thing is it's looking super pricey, and I think we can understand sort of why. So, Eric, we've done a couple of lives on this, so it's actually not too crazy of a risk. Because think about it, if someone exercises early, you get to keep all of the extrinsic value. So unless it, basically all of the extrinsic value baked into the option, you get to keep. What the fuck is going on? Oh my God. Okay. There we go. Yeah, all of the extrinsic value that's in this option, you would get to keep if someone exercised early. So it's actually not a bad thing. It actually can be a really good thing. Unless the price jumped to 1,000 today and then someone exercised it. But if you were if the stock was, moving towards $1,000 and you were still in this position, that's a whole other conversation, right? You should have been out of that position as soon as you realized you were on the wrong side. Right? If I saw this thing, rip up to $600 and keep pushing higher, I would definitely be out of this thing. I'd take my loss. Or if I saw vols, go up another 30 points or something crazy, I would 100% be out of this position. Right? So this is really the big trade I'm looking at right now. Right? We've talked to a couple of people about it as well. Sounds like a pretty good idea. I definitely think it's a lot more likely as well that this thing goes back down to $50 as opposed to up to $1,000. I definitely think that's a much more likely, even short-term outcome. Just have some water. Any other questions about this position, guys? If not, we're going to talk about a couple of earnings events that I'm looking at today. We have Alta, we have Docu, we have Stne. We're going to take a look at each of them, try and find a trade there. I was actually looking at Alta this morning, and it was sort of, it didn't really look too good, but we can definitely take a look at it. Then we got Docu, and then we got Stne, which we're going to talk about a little bit of an interesting case for. So Adam's asking, why do you think it spiked up yesterday to 350? I honestly have no idea. We have to remember this thing has a ton of volatility right now, right? There are a lot of people looking at this, but just because there's a lot of volatility doesn't mean it can't be expensive, right? So when we're looking at these far dated options, it's like they're pricing in this level of volatility to happen forever, and I don't know if that's likely. I really don't. But yeah, I don't know if anyone else in the chat has a bit of a differing opinion. Maybe has a little more insight into what happened. I'm not personally very sure. Let's see here. Next up on the list, we'll hop over to Alta now, I guess. Let's talk about Alta quick. Let's see what's going on the tail end here of our earnings season. Our favorite season is earnings season. I think we all can agree on that. So, Alta Beauty. We can see here that Alta has an implied move of about 6.5%. All right? 6.5% is what the market thinks is going to happen around Alta's earnings tomorrow or tonight. We see an average move of 7.68. Right? So off the bat, we're like, oh, maybe this is a little bit cheap. Right? It looks like it's a little bit cheap. And it has an average implied move of 7.58. All right? Oh, that's funny, Tim. Now, why might we be seeing this high implied or average move here? Well, we have to note that we have a couple of big movers here, right? We have, back in 2018, we had this 13% mover. We have, a couple 14 percenters, 8 percenters, 13, and then this massive 29% mover over here. So we can see that sometimes it's either a really small move or it does have these huge moves. And if you look at this earnings distribution, it's pretty crazy. Right? We get like, we actually have like 3, high frequency areas here. But I'm noticing that we seem to be getting a lot more, let's see, puts and calls. Yeah, like this is such a tricky one to trade, guys. Like I'm almost thinking that we could buy some vol here. I don't know if I'd be selling options here, right? Because not like normally I would say like, this one big spike, understand what happens here, and then you can go ahead and do it anyways because, if you don't think that we're going to have a repeat of this, you'll make some money. But the amount you make versus the risk you're taking on, it just doesn't seem to be worth it. Right? We can see here like it had an implied move of 8, it moved 13 that we would be paying. Here about the same. I'm thinking that we could buy some vol here and probably get away with it for pretty cheap. Right? If we're on the wrong side, we can see straddle price doesn't change like crazy. We can actually go price this out if you want. Let's go price it out. We'll go over here to Alta. Let's see. The March 12s. Come to the at the money strike here. Let's say we buy a 345 straddle. It's going to cost us $24 to put on. That's what our trade's going to look like. So let's see here. All right. Also, though, something to note is long vol hasn't been really paying this earnings season. I think we've had like 1 or 2 long vols work out, but so that's one thing to note as well. So let's see what this position is going to look like tomorrow morning. Right, vols are going to come down by about 20 points. So we come over here, we can adjust it, drop them by 20. And we're going to move it forward 1 day. And we'll do a 1 lot. So this is what our max risk looks like, right? If the stock doesn't move or moves down very, very slightly, we're risking about $1,000. If we get what's likely to be the move, we'll lose, a few bucks. But we have that exposure. If we do get a, 15% move, something like that, it's going to pay out huge. Right? It'll pay out really, really nicely for us. So it'll be like, if we, let's see, if we got, 10% mover, we'd be up $1,000, $1,100. Right? So, it's a little bit of a punt, but a little punt never hurt anyone. Maybe if you have a directional view, let's see if we can structure something out. Seeing a little bit of the call skew here, might be able to get something on. If you think this is going to go up, you could do something like this. Butterfly. Let's go with 345. We'll go up 20, 365, and then 375. Right, something like this maybe. Drop it down to a 1 lot. Right, you can see here you're risking about, $290. Potentially make, $1,700. It's a pretty good risk reward. What I like about this too is that we are at the end of the week here. Right? So, in the morning, your position is going to have a really nice P&L if it does move into the middle here. Nice little 100%er. You hold it a little bit into the day, you can be making a ton of money. Right, so I like these 132 flies, especially if the earnings is a lot closer to the expiration, because we see that a lot of the P&L from these comes from that last day, right? That last couple days of where you're holding it. So definitely, I would consider something like this if you think Alta is going to trend upwards on their earnings. You can play around with the strikes a bit. Maybe if we did, you could make the strikes wider, right? Try and find something that maybe gives you the view that you're looking for. It gives you a better risk reward. But a little punt like this never hurt. Or you could just buy some vol, right? So, but honestly, I would say like Alta, it looks just the reason why I'm saying you could be buying vol is it looks pretty fairly priced. Right? When it's fairly priced, if you want to take a trade on it, I would be going long vol because it's not going to cost you too much if it does, if it's not a huge winner, and or if it's a loser, it's probably not going to cost you too much, and and then you get that long vol exposure, right? That exposure to a big move, right? And if anytime you can get that exposure for super cheap, and you think it might happen, it's probably worth taking it on, at least even for a hedge for your book, right? If you're leaning short vol everywhere else, it's a nice little trade maybe. Next up on the list, we have Docu. Oh, Docu. What did last season do for you again? I think it was a little winner. Yeah, it was looking good. The thing we're noticing this season, by the way, is the implied move for all these tech companies is actually lower. And I think this has to do with the fact that we haven't been seeing some huge movers this season. Things have been pretty tame. It's actually probably been one of the best earning seasons to be short vol. And so we're seeing these implied moves coming down for all the stocks, right? Pretty much in line with what the average move is here. But I'm still thinking that the level of implied vol here is pretty high, and I would probably be taking a short vol position on this. We can see that, selling vol here has been very profitable. You would have made about 100% on your risk over the last couple of years. And, we can see that a lot of events, it does imply, around an 8% move, right? All these events here, it's implied an 8% move. Occasionally, you take a bit of a hit, but, that's what we get paid for, right? There'll never be one where there's no risk. Wings might be a little bit pricey on this. Let's go price it out. Let's see. 220. Sell. Straddle. Right, about $20. So we're going to go here. We're going to sell an Iron Condor. We're going to go $40 wide. So put our at the money strikes at 220. We're going to do the call at 260 and the put at 180. Let's have a look. All right, here's our Iron Condor. How much would it cost us if we were doing the straddle again? Let's take a look. So the straddle would cost us $18.22. The Iron Condor would give us $18.22. The Iron Condor would give us $17. So I would say that it's totally okay to be buying the wings here. I don't think we're overpaying for them. We obviously still have some risk on the table though, right? We have a max loss of about 2,200 on this. So definitely take that into account when you're considering putting this trade on. You can take that hit, right? Even if it happens 1% of the time, it does happen. So if you're trading a really small account, you're going to want to be careful. You're really going to want to be careful here. But, if you're, a well-seasoned, completely emotionless earnings trader, you've probably been hit with one of these before. You know what the deal is. Throw it on. I wish Hutch would come to these mornings lives. I would love his opinion on these trades. And then we have one more that we're going to talk about this morning, guys. We're going to talk about Stne. So it's an interesting case with Stne. So one of the things that we see here with Stne is that they actually pushed back their earnings date. So they had it set, and then they pushed it back by a week or two. And whenever we see that happen, it's usually an indicator that the earnings is going to be bad because they're pushing it back, waiting for more revenue to come into accounting, something like that. It might make sense that the stock is going to miss their earnings. So off the bat, I was thinking maybe I should buy a put here, right? A little punt. Maybe we buy a put, And here's something else I saw that really got me thinking maybe this is a good idea. Check this out. No volume. 32,000 puts. No volume. right? Someone bought 32,000 puts here. And obviously, I'm not saying that this is insider trading, but it just so happens that when I think there might be a little bit of a blowout to the downside, somebody came in here and there just happens to be this insane spike in put volume. So part of my thought process here is maybe we could come in and buy a put. Right? We're not going to get too fancy with it. We would just come over here. What stock is it again? Stne. And we could just, pick up an at-the-money put. Doesn't need to be anything fancy. Right? We want that exposure to a big move. If it goes down 10%, we would make a nice little bit of coin. Right? Make a few $100, and we have that exposure to any sort of big move on this stock. So if you're looking for a punt, I would say this is a pretty good one. Right? I think it makes a lot of sense. Let's recap exactly what it is. Stne pushed back their earnings date. They said it would be on the 1st, let's say, and they're like, now it's going to be on the 11th. That could indicate that they're trying to wait for more revenue to come in or something of that nature, which means there's a chance that they're going to miss their earnings. Now, if that was the case, we'd probably want to come in and buy puts. And what do we see when we come look at the option volume? We see about 1 week ago, somebody came in and bought a ton of puts, 32,000 puts in a stock that has an average option volume of like nothing. Right now, obviously, this could be someone hedging or relative value thing. There's lots of different things this could be. But it just so happens that on the one stock this season that I'm thinking, wow, maybe it's going to have a big miss, we see something like that, right? No call volume, huge spike in put volume. I'm definitely starting to think that it's worth a shot. Right? It's worth a little shot. I definitely wouldn't be betting big here. Right? I think it'd be crazy to bet big. The nice thing is it's not a super expensive play. You could throw a couple $100 on it and get exposure to it. All right, let's see what this position will look like in the morning. So we come here and we see, let's see. Vols are going to come down from 86 to 52. So let's plug that in here. So that's 34 point drop. Minus 34. So it's going to look like this. If the stock doesn't move or moves to the upside, you're going to lose your $300. More or less, that's what you can expect. Right? But if we get that move to the downside, it's going to print. Right? It's a little punt. The reason why I would say do the put is, we don't want to be, we don't want to miss the potential that this thing moves like crazy. Right? When we're long vol like this, we don't want to cap the upside potential, right? As we might do if we were to trade, let's say, like a 1-3-2 fly or a vertical. Right? Because I also have no idea how far it could move, right? I don't have a view on that. It's just like I'm just noticing something a little fishy here. Now, if you wanted to do something a little different, like what would it look like if we did a vertical a little bit out of the money? You'd have to go pretty far out to get anything worthwhile. Right? Even at $68, you're still paying a lot. Maybe if you came like all the way down here, you could get something if you went down here, right? $10, 1 to 10 risk reward. So this would be worth it. If you think it's going to be like a huge blowout, I just have no idea how big of the move it could be. You could do something like this if you can get the fill. So yeah, those are the stocks that I'm looking at today, guys. Do you have any questions or any stocks that you'd like me to help you look at as well? Just to recap, GME vols looking super pricey, right? That further dated vol, definitely we're going to be throwing on a little bit of size there, putting some, selling some of those 310 straddles at the Jan 2022, collecting about $385 in premium for that. We're not going to be holding it for a very long time, though. We're basically thinking that as the stock starts to come back down, which we think it will, we will see vols also come down, and that vol crush is really where we're going to get paid. Then we have Alta earnings. I'm not really seeing anything there for Alta earnings, but if I were to take a trade, it's so tricky. I'd probably take a long vol trade just because it's not going to cost me too much to do, but I'm also not doing it. Like, full disclosure, I'm not doing that. Around earnings, I tend to just typically lean short vol, which is what I would recommend for DocU. Right, so the other one we're looking at tonight is DocU. Short vol and DocU looks pretty good. And then the final one is Stne, where we're seeing some unusual option activity. We're seeing them push back their earnings. And I'm just starting to think, you know what? Maybe it's worth a little punt to the downside here, right? We'll bet that, the stock's going to go down. They're going to miss their earnings. And if we are right, we shall get paid. So, since we have no questions, I am going to wrap up this morning's stream here. I see a whole bunch of new guys coming in just towards the end here. We just jumped up from 10 to 15 viewers. What's going on, everyone? We usually wrap up the stream around 11, but we just went over all the ideas. This is going to be, all our lives are posted up, so you can review it if you want. And just a quick note, if any of you like the PA terminal and haven't signed up for the free trial yet, so Stne earnings is tonight, Tim, or tomorrow morning. It was pushed. It was supposed to be in the past. If you haven't signed up for a free trial of the Predicting Alpha terminal and our community, our beautiful, thriving community over here, you should do so. All you have to do to sign up for that free trial is send me an email to sean@predictingalpha.com, and I'll add you to the wait list. I'm just getting everything set up for it. All you're going to do is basically you're going to sign up for PA. You get a week or two for free. You cancel if you don't like it. You won't get billed. You're going to get a free one-on-one call with me where we can go over strategy, portfolio, anything you want. You get the terminal. You get all of our education, strategies, and the community. So, if you stuck around for the majority of this stream, you probably know there's something here, something worth exploring. So give it a shot for free sometime in the next week or two. So, thank you, everyone, and we will see you tomorrow. And I'll talk to the PA guys later on today. See ya.